Good morning. Welcome to Stock Market Today for Tuesday, March 26th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. And a special thanks to StockCharts.com as well as See It Market for posting our work every day. Head over to ChaikinAnalytics.com/today. Sign up for a free email to follow along with this show. Get daily stock ideas for you to consider in your inbox every market morning before the market opens. So U.S. equities were mixed in quiet Monday's trading. Treasuries were stronger again with some more curve flattening. The dollar was down on the euro cross, but stronger versus the yen. Gold finished up 80 basis points, but oil was weaker with WTI settling down 40 basis points. At the sector level, your outperformers were consumer discretionary, industrials, utilities, and REITs. Underperformers, tech, financials, comm services, and materials. As we get to the desk this morning, S&P futures are higher, up 50 basis points and near their best levels of the morning as of this recording. European equity markets are higher following a mixed session in Asia. Treasuries are fading after recent gains. The dollar is weaker against the euro and sterling, but stronger against the yen. Gold down 60 basis points and WTI crude is higher, adding 1.3% this morning. So really, stocks turned in a mixed session yesterday. Not a lot that we could discern from the activity. Little bit of a kind of consolidation or stalling pattern here to the downtrend for those of you who are candlestick pattern fans. But what I see is a test of support above a rising 200-day moving average. Resistance up here, 2850 to 2875, support 2750 to 2775, then down near 2725. RSI remains in bullish ranges, and Chaikin money flow dips bearish and now is beginning to lift its head a bit. So again, what we've been talking about, the playbook, if you will. We are looking for tests of support where RSI stays in bullish ranges. What does that mean? That means it's a healthy pullback within the context of an uptrend, and that uptrend still has bullish momentum. That is what we're looking for. That is where the opportunities will come about on the long side for you to look at bullish and very bullish stocks in leading parts of the market when those stocks become oversold. For now, there is no change to that strategy at all. Your market in a minute. Dow and Russell rise as the S&P 500 and NASDAQ decline. Sector relative strength favors defensives and growth. Financials fall to relative lows. We'll take a look at that. Treasuries extend their rally. 10-year yield near support. Remember the chart that we showed yesterday? 10-year yield broke through 2.6 and is quickly targeting 2.4%. So we're now nearing that 2.4% support level. Futures do point to a higher open here today. Now looking at our power bars for the major indices, the Dow 7 to 4 in favor of the bulls. S&P 500 saw a bit more deterioration yesterday. 102 bullish stocks for 72 bearish stocks. That index was down slightly. NASDAQ slight out, underperformer. Still 2 to 1 bulls to bears. 28 bullish or very bullish stocks. 14 bearish or very bearish stocks. Small caps bucked their recent trend of relative underperformance. 348 bulls, 372 bears. We continue to favor large caps over small caps for those of you who are paying attention at home. Bonds extended their rally up 16 basis points to send yields lower. According to the Chaikin Power Bar, small cap stocks are somewhat more bearish than large cap stocks. Major indexes are mixed. Our stock of the day today, Rambus. This is a blast from the past stock, an old school tech name. Comes to us from the Semiconductors Group. Closed at 1032, down 39 basis points yesterday. Ticker symbol RMBS has a very bullish Chaikin Power Gauge rating due to very positive expert activity, attractive financial metrics, and strong technicals. That's the price volume activity. Financials, earnings, technicals, and experts are the 4 categories. Within these 4 categories, each of them has 5 factors to make up our 20-factor model to come out with our power gauge rating. And for Rambus, it's very bullish stock, strong trend, strong industry group, type of name we want to be considering on the long side from a strategic standpoint. After the strategic standpoint, we look to the tactical setup to see if it makes sense to get involved now. The answer here is no, but let's walk through the process. Very bullish stock, been outperforming the market since early February, and the intensity of that outperformance is picking up. Market and model are in agreement, dynamic duo in gear. What we want to wait for here is for the stock to round out of this overbought condition and get closer to oversold while money flow stays persistently bullish. Stock is above a rising long-term trend line. I do see some support here in the 9 to 950 area, so a pullback to that level might be enticing, especially if it comes with an oversold reading. The flip side of this is we don't want to ignore momentum and breakouts. So to me, the way I'm framing up Rambus is sideways or a pullback to support in the 9 to 950 area that comes with an oversold reading gets me excited about Rambus. At the same time, a breakout through $11 gets me excited about Rambus. Here at 1032, I'm adding it to a bullish watch list. Continue to build out your watch list, especially with the market overbought. Remember, we talked about this yesterday. Our overbought, oversold indicator for the market in general is overbought. So we want to get aggressive when the market's oversold at support and our favorite stocks are oversold as well. Sector tracker now, moving to the major sectors over the last 5 days. If this doesn't scream defensive posture, I don't know what does. Real estate, utilities, and staples, top 3 groups over the past 5 days. Discretionary and comms round out the top 5 with positive activity. Financials at the bottom of the list, likely going to remain under pressure. We'll take a look at the relative performance of financials relative to the SPY in a little bit, but just understand falling rates, bearish for financials. That's very first level thinking. Obviously, we would want to dig deeper than that, but as a starting point, falling rates are a headwind for financials. Materials and industrials round out the bottom 3. Healthcare, energy, and tech are the middle of the pack. Tech this to me is just a slight pullback within what is a solid relative uptrend. Energy, we've been talking about this one for a while. We're watching it closely. We're not there yet. Energy still has a bearish ETF rating for XLE in Chaikin Analytics, but we are noticing downside momentum is waning. Same can be said for materials, but we're not there yet. Our industry in focus today, home builder services, and we're going to get a read on that industry tomorrow when Lennar reports. But home builder services has outperformed the S&P 500 by nearly 2% over the past 6 months, and its power bar ratio, which measures future potential, is strong, 9 bulls to 6 bears. Currently ranked number 8 of 21 subsectors, it has moved up 5 slots over the past week. Some of the indicative names here: Taylor Morrison, TMHC, has a very bullish rating. MI Homes, MHO, has a bullish rating. And Lennar has a bullish rating as well. And we're going to take a look at Lennar here today with the caveat of they report tomorrow morning. We're not making a call on the quarter here. I'm not saying to go out and buy or sell this stock in front of earnings. I'm going to walk through the normal analysis that I would perform and then lay out situations following earnings that might make sense to get involved. Bullish stock, strong trend, strong industry group, type of name we want to consider on the long side. Market and model are in agreement. Stock's been outperforming since January, and the model has been mostly bullish since that time frame, and we're on that bullish rating now. In the near term, we're overbought. Our overbought, oversold indicator, proprietary to Chaikin Analytics, is on an overbought reading. And money flow, while it's been mostly positive since November, is now neutral. Stock is above the long-term trend line. Had a strong day yesterday. Again, they report tomorrow morning. Here's how I want to play it. I'm not making a call on the quarter. I'm not telling you to go out and buy Lennar because I think they're going to beat. I don't have a read on the quarter. But here's how I want to think about the setup. A positive earnings announcement that pushes the stock through $50 likely has momentum to it as it breaks through this resistance level. That would be a compelling entry for a momentum trade to the upside. The flip side is if investors are disappointed by earnings, all else being equal, if they report a good quarter but it misses expectations, you have some solid support down here at the $45 level. A pullback to $45 that holds the trend line and starts to work off this overbought condition sets up a compelling entry point. So a couple ways to play it. I want to give you the situation as I see it, And that's how I see it for Lennar with their earnings on tap for tomorrow morning. Yesterday's S&P 500 gainers and losers. Viacom. Remember last week we talked about Viacom being down because of the potential for their channels to go dark on DirecTV. Those two companies have reached some level of agreement. Viacom rebounds. There's Lennar rallying in front of their print, up 3.5%. No real news to drive that one other than to say falling rates likely a positive for the home builders and the housing industry in general. ConAgra seeing some follow through to the upside, 3.44% yesterday. No real news on FTI. Drillquip up 2.82%. L Brands, LB, one of their holders announced a stake and is pushing for the company to explore strategic alternatives. That sent that stock higher by 2.6% yesterday. The new Fox A, what's left after the merger with Disney buying some Fox assets, down 3.3%. Most of the initiations on the stock have been bullish, but investors are having none of it, down 3.3%. Abiomed, no real news to send that stock down 3%. Akamai caught a downgrade. Stock down a little less than 3%, 2.96% on that print. Micron given some back after their earnings-induced rally, up down 2.5%. Drug distributors were weak yesterday. McKesson down 2.44% with the rest of the group. Now let's look at it, what we're talking about today. It's Relative Strength Day here at Chaikin Analytics. We look at sector rotation, how the major sectors are performing relative to the market to give us an indication of where we want to be looking for our long ideas. Remember how important relative strength is to our process. Financials, XLF relative to SPY, clear downtrend. It wasn't the news on Friday that sent financials lower. That just accentuated it. Financials have been in a relative downtrend since February of last year. They've been underperforming the market for a year. Clear downtrend, if we draw the line, below a declining 200-day moving average on a relative basis. And if you notice, during rallies, RSI does not become overbought. Cannot become overbought, becomes oversold. That tells us that this downtrend is strong. Now, could be a little bit overdone here in the near term. We are extended below the 200-day moving average, and we are oversold. But the trend is decidedly negative as we plumb new relative lows. And on an absolute basis, solid resistance overhead. No real reason to get excited about financials on the long side. Technology, on the other hand, is growth in a slowing growth world. We've been talking about this for a while. Tech's been outperforming the market. Went into a nice little consolidation here and has now broken to the upside above this trend line, above the 200-day moving average. Now, tech is very overbought on a relative basis, so I wouldn't be surprised to see a little bit of a consolidation here above this breakout level. In fact, it would be healthy, and I think it would give tech an opportunity to kind of pause here on an absolute basis before breaking to new highs. Tech is a group that we like a lot in a slowing growth environment. Our thesis is that investors will likely pay up for secular growth. And when we think of secular growth, obviously technology falls into that group. Now, tech is a broad group. We would obviously take our analysis a step further to the industry and group levels. Consumer staples, are they making the turn? That's the question I'm asking. We looked at the movement of the last 5 days. Staples were in the top three. Here's staples relative to the S&P 500. Downtrend consolidation and now beginning to round higher above a rising 200-day moving average, holding above support. Notice here the RSI has not been able to become oversold during this consolidation. That is a sign of potential bullish momentum shift. And on an absolute basis, we do still have some resistance overhead, but staples are starting to look interesting on a relative basis. So it makes sense to start to dig into the group. Look for some names that could be potential leaders. Bullish and very bullish stocks, when they become oversold, could potentially set up solid entry points. And finally, we'll leave you with a stock idea for the day. JD.com, bullish stock, strong trend, strong industry group. Market and model are in agreement here as we have a little bit of a personality change. Bullish rating is new. Outperformance is new. Stock is rounding out of an oversold condition with bullish money flow. I think as long as JD.com is above the $25 level, it's compelling on the long side of the portfolio. It's my bullish stock of the day at Chaikin Analytics today. So that's it. Sign up for the email, chaikinanalytics.com/today. I'll see you back here tomorrow.